What's going on, guys? It's Errol. In this video, I'm going to be explaining with you a little bit of what I know about volume resistance. Volume resistance will keep a stock from spiking in the morning. If you see a stock gap up, sometimes you wonder, should I go long on it or should I short it? Understanding volume resistance is going to give you a really good idea on your decision making when it comes to longing a stock or shorting a stock. You're going to want to watch the entire video because in the video, I'm going to be explaining the trading journal calculator that I'm going to be giving to you guys. Throughout the video, I'm going to be showing you how you can log your trades and how you can customize it to your own liking. If you're watching, I'd appreciate it if you just hit that like button, because if you know how the YouTube algorithm works, that just helps me so much, so I really appreciate that. One last thing is, if you're completely new, if you hear me say any terms or just words, make sure you write them down if you don't know what they mean, so you can go back and Google them later on. That's going to be the quickest way you're going to be able to learn and just pick up knowledge about the trading world in general. For the ones that are curious, this is TD Ameritrade Thinkorswim. This is a charting that you see on your screen right now. So I'm going to go ahead and start off with WORX. So WORX gapped up roughly 200%. So WORX opened up roughly 200%. WORX opened up at a higher price than it closed at, roughly 200%. So how do you know when you wake up and you see this gapping up? How do you know if you want to go long on this or if you should short it? First thing that I like to do is I like to go on the 1 year, 1 day chart. What I'm going to be looking for on the day chart is volume resistance. You can see right here, the first day it spiked was the first day it really had volume in the last year. There's nothing behind it. There's really no resistance. There's no bag holders from the past to really cause any heavy selling pressure. For this day when it gapped up, it was something to do with the coronavirus. That's another reason why these will run, especially when they have no resistance. Another reason why this one is good to long, especially because it's first green day, especially with no resistance, because that's one thing people that are shorting like myself, it looks out for, and that's one thing that is a huge red flag, is shorting something with no resistance, especially when it has a low float with volume and it's hyped up right now. It has news about the coronavirus. If I type in WORX, the volume for this day was 96 million, almost 96 million volume, and the float for this stock is, that crowded volume is a short seller's worst nightmare. That is 100% why you do not short on the first green day, especially when there's no volume resistance behind it to stop. Other than that, the first green day was amazing for the longs. The next day it offered overextended gap down short. The next day it bounced into another resistance level and I was able to short that as well. The second day after it gapped down and I shorted, the reason why I shorted this was because this closed near its highs. People are getting in it expecting a gap up, and when I see this gap down, I know they're stuck at this price. I know the next day if it gaps down and it spikes, they're gonna try and get out, break even, and I'm gonna be short selling at the same time, causing a huge selling pressure. I also shorted the next day because it gapped up into my resistance. Just gapped up into my resistance. Literally just, it honestly, WORX was just handing the trades to me on this one back-to-back days, I'm not gonna lie. Because the next day it just gapped up into resistance beautifully and I was just risking the day high. And then it ended up dumping and halting and dumping. And actually I was shorting at 937, I'm not gonna lie. I covered at 870, so I didn't even get a catch. I didn't even get to catch the big move downwards. Especially since the volume was slowly accumulating and things like that. I just wanted to take my profits when it started dumping. So that was the whole reason. And I just did not expect this thing to dump like that. I mean, it was such a beautiful short, worked out perfect, even halted and then gapped down after the halt and went down even further. One thing I want to bring to your guys' attention is look at the setup on WORX. And I'm going to bring you over here. Now look at the setup on the left, WORX, and look at the setup on the right. This one's IMAC, IMAC. And look how similar these setups are. I remembered looking at IMAC. I remember it just being an absolute beautiful short, just worked out perfectly. If you see how similar these are, these offered the same exact things. I mean, it closed near its high, people expecting a gap up on IMAC. Same thing they were expecting on WORX. Doesn't get the gap up, gaps down. Now they're trapped. Now you can short the spike, and it's gonna sell off for the day because of all the selling pressure. This one bounces into the resistance and then you're able to short that. And then WORX also gaps up into resistance and then dumps for the rest of the day. I mean, these ones, it's not even that you can just predict the future, but they really do tend to repeat themselves. Even though the WORX sold off that second day, you have to think about it in the macro view. Look how high, like look how much it was still up. Even after the first day, it was still up an overall 286%. That's another reason why it's important to keep in mind the day chart, and it's important to keep in mind how much volume each day is getting as well. That's one thing you're gonna really wanna pay attention to. And I'm just gonna go over this one today just because I saw people trading it in the chat and things like that. And one thing I'm gonna point out is, so we saw that Apple gapped up in here. Let me go to the 1 day, 1 minute chart. So we know that Apple Apple gapped up, and this is why you just want to be patient and not try and guess a direction, because if we put in our support and resistance lines, because you can see at market open it has a little bit of a push, and then it tries to sit on the support from the pre-market. This is why you should just wait for the market to choose a direction, because you can clearly see after this push, if you would have just set your levels, it would have clearly showed you this is to the short side. This is definitely for the bears. The bears have a hold of this trade, and that's the direction it's going. And if you know how to trade Apple, you know how it usually moves. That's the thing, especially when it comes to any stock in the market, any niche in the market you trade. That's why it's so important to stay to the same thing or stay trading the same type of stocks, because you really get a sense for how they move. And especially some individual stocks, I know in the large cap area, you'll start trading like Tesla, Apple, stocks like that a little more on the regular every day. So you'll get a sense for how they move and things like that. And that's things you're gonna have to pick up as a trader. That's why when it comes to trading, half the battle is just getting the experience, so you can just get through that trial and error, and so you can figure things out for your own. That's just huge when it comes down to trading. This is what the trading journal calculator is gonna look like. When you guys get it, you'll be able to change the accent colors, change anything you want, just customize it exactly how you like. So this is how the front page of the calculator is gonna look. Let me show you the drop down menus on them. So for example, right here, if it's a day trade, you can put if it was a day trade, swing trade, long term. You can put if it was a call option or a put option. You can put if you went short on the stock or if you long the stock. You can put what setup. So a lot of these are gonna be drop down menus, and then right here, obviously you'll input the number of shares you want, and you'll input the entry and the exits. So right here, if I put 500, it'll automatically calculate it over here, and then over here in these top windows, it'll automatically calculate it as well. So that's pretty cool. And again, you'll be able to change these colors, customize it however you like. Just make it how you like it, because it's gonna be your personal journal, how you track your trades and how you can improve as a in the middle where it says example down here, is just gonna give you an example. Pretty self-explanatory. And then over here, let me zoom in. This is where you can customize your patterns. For example, if I put down here first green day, oh, can't spell. Like I can put down their first green day, right? So now that I put it under setup first green day, I can go back to journal, go to the drop down menu, and find first green day. So that's how you'll be able to customize this exactly how you'd like. To really improve in trading, it's gonna be really important to track your trades so you can see on paper what you do well and what you don't. So you can cut out what you don't do well and then double down on what you do and what you do well. If you want this trading journal calculator, it's gonna be the first link in the description, so make sure you look out for that. And real quick, I'm gonna show you how the risk to reward works. So if I just input a day, what's today? I'll just put April 15th. We'll put it's a Thursday. Did I follow my plan? Let's just put yes. Let's just put EDNT. Let's say we traded EDNT. Let's say it was a day trade. Say it was equity, it was just regular shares. Let's say we shorted it today, because I know it shorted off. It sold off today. EDNT didn't have any volume resistance, but it still sold off today though. That one would have been gap up short. Target, I'll just say target hit. How many shares did I buy? I'll just say I bought another 500 shares at we'll just put $3. And let's say we exited 230. That'd be a $350 profit, and then you see it just automatically calculates it over here for you. That's gonna wrap it up for this video. Make sure if you want that trading journal calculator, it's gonna be the first link in the description. Make sure you don't forget that. If you wanna find me on any of my socials, you'll be able to find that in the description as well. Also, if you wanna join our Discord chat with almost 6,000 members that just talk in there when the market's open and things like that. Also, let me know in the comments if this video helped, just explaining some of that volume resistance, and if you just want me to explain new concepts in the future. If you're new to the channel, if you haven't already, go ahead and please subscribe. I would really appreciate that. And again, if you haven't already, I would appreciate it if you hit that like button, because again, if you know how the YouTube algorithm works, it just really helps and works in my favor. So if you did that, I would appreciate it. Make sure you don't forget to sign up for the trading calculator. It should send you about 1 or 2 emails, but one of them should have it in there. So make sure you look out for that, and I'll catch you guys in the next video.